Stats Canada releasing our GDP results for August this morning, and the GDP fell slightly between July and August, driven by declines in the transportation and warehousing sector. Here to tell us more is Michael Davenport, senior economist at Oxford Economics. Michael, thank you for joining us today.
Good morning. Thanks for having me.
The 0.3 decline month over month, was that on your radar at all? I don't think everybody was predicting a zero growth, right?
So StatCan's flash estimate was for zero growth. That was also very close to the consensus estimate. Our forecast was a little bit more downbeat than the consensus. We had expected GDP growth would be a little bit below StatCan's flash estimate and the consensus. So it's not all that surprising from our perspective. I mean, in general, our view has been that the economy would struggle to grow on an aggregate basis in the second half of this year. And so I think we're seeing that showing up in the data.
And the concern areas, are they what you expected, or were there some surprises?
Yeah, so it was largely in line with our expectations. There's a few one-off factors that led to the decline, big decline in overall GDP. So if you just look by industry, the biggest contractions came in goods-producing sectors. So overall goods-producing output fell about 0.6% month over month compared to July. And that was pretty broad-based in the goods-producing sector. So agriculture, forestry, fishing, hunting, that was the only sector that didn't contract, and it saw no growth on the month. Outside of that, we saw contractions in mining, quarrying, oil and gas extraction, construction, and then the trade-sensitive sectors. Those were a big drag on the economy in August as well. So manufacturing output pulled back after rising in July. That kind of resumes that downward trend that we had seen since the beginning of the year. Wholesale trade, another highly trade-exposed sector, contracted as well in the month of August. And then the transportation and warehousing sector, that sector did fall. Now, that was in part due to the the flight attendant strike from Air Canada that occurred mid-month. Now, we do know that was resolved, and so there should be a rebound in the transportation and warehousing sector in September. And then the other big drag on GDP in August was utilities. So utilities contracted 2.3% month over month. That was the largest of any industry. Now, StatCan attributed that to drought conditions, but if you look at the trend in utilities, it's actually been quite weak. So it's down to its lowest level since May of 2018 in August.
And I just want to go first off to the trade sectors. I mean, I think we kind of expected a drop. Was it in line, and any indication which way it's going as we move forward?
Yeah, so another drop in August was not all that surprising. We had some earlier data, manufacturing sales, also wholesale sales. So it wasn't all that surprising that we saw contractions in those sectors. I mean, our view is that the trade-sensitive sectors will continue to be heavily impacted by U.S. tariffs, by the environment of pervasive trade policy uncertainty. That's impacting output for firms in the manufacturing sector, wholesale trade sector, as well as transportation and warehousing. But it's also limiting investment, and it's limiting hiring in those sectors as well. We think that will largely continue as long as significant U.S. tariffs remain in place. And that sort of underpins our forecast for the economy to really struggle to grow in the second half of this year into early 2026 and remain on the precipice of a potential recession.
Okay, let's talk a little bit about utilities. Is it really all the drought? Let's expand that a little bit. Or is that a number that we should be concerned about?
Yeah, it's a great question. So as I mentioned, StatCan attributed the August drop largely to a drought. However, overall, if you look at the trend, it is certainly down. And we think that's likely tied to the broader weakness in goods-producing sectors that we're seeing. So generally, the manufacturing sector, other trade sort of exposed sectors that have been hard hit by U.S. tariffs and by the trade war, those sectors tend to consume quite a bit of energy. And so it's not all that surprising with the declines in industrial production that we've seen over the last several months that the utility sector has also followed that.
Okay, and any surprises on a positive side?
Yeah, so the one positive or somewhat positive feature of today's report was the retail trade sector. So retail trade output did rebound 0.9% month over month. That offsets only a big decline in July. And so that's also not all that surprising. But we had retail trade data that showed a similar rebound on a monthly basis in August already released earlier in the month. And overall, when you look at the trend in retail spending, despite the large increase in August, it's really gone basically nowhere since December of 2024, when retail spending was temporarily boosted by the GST holiday for food and beverages and a few other products. So while that is a positive for August, generally we do think there's a few headwinds facing the retail sector looking ahead, whether it be slower population growth or a continued weakening in the labor market that's likely to weigh on consumers' both willingness and ability to spend moving forward.
Okay, and let's talk R&R, rate cut or rates and recession. Rate, do you think we'll see a cut?
That is always the big question. So we saw the Bank of Canada lower the policy rate earlier this week. However, they signaled quite strongly that they are now done cutting interest rates. We think that will be the last rate cut for the Bank of Canada this cycle. And that really comes down to the fact that they're still balancing the upside pressures on inflation against the downside pressures on demand from tariffs and the trade war. And they know that monetary policy is not the tool that needs to be used to address structural shifts in the economy like we're seeing with U.S. trade policy, significant tariffs, and sort of reorganization of global supply chains. So overall, while today's weaker GDP report definitely raises the odds of a technical recession through the middle of this year, and continued weakness in GDP growth, as well as continued weakness in the labor market, could lead the Bank of Canada to lower the policy rate a little bit, say another 1 or 2 25 basis point cuts early next year. Our base case is that they will remain on hold for the foreseeable future.
Okay, Michael, thank you for joining us. We appreciate it.
My pleasure. Thanks for having me.
Michael Davenport is senior economist at Oxford Economics.